The question on everyone's lips is, what is going to happen to Dubai house prices? Is the market crashing? Are prices even going to move? Is there any distressed deals? Everybody wants to know. So what I'm going to go through today is basically what has happened for the last 25 years. And I actually am going to make some predictions as to what I believe the market is going to do during this time. Now, I'm not an economist, but I have been in the market for 12 years. And this is a piece of training that I have done since 2017. So I've done this specific segment internally for our team consistently. All right. Now, this is, I believe, the most important time to be able to present information like this. I'm going to talk through the different cycles, what caused the different cycles, and what I believe the next phase of the market that we are going to be entering into. So the main question, what does a crash look like, and is the market going to crash? If you listen to Western media, I'm sure they will tell you that it is already crashing, but that is simply not the case. If you look here, this is basically the peak of the first cycle in Dubai's history. This chart starts in January 2008. Okay. Now, if this chart were to go further back, data points were hard to get before that point in time, but the previous cycle was between 2002 and 2008. 2002 was when freehold property could first be bought by expats in Dubai. So that is ultimately the starting point for the first ever cycles, the first ever transactional data that we can look at. But if this graph were to be extended this way, you would see that the previous cycle started in 2002 and ended in 2008, a 6-year cycle. Now that is a really important point to note, because before I continue on with why and how the market has done what the market has done, the 6-year cycle is a very important metric to consider, because the first cycle, 2002 to 2008, exactly 6 years. Second cycle, 2008 to 2014, exactly 6 years. Next cycle, 2014 to 2020, exactly 6 years. Next cycle, 2020 to 2026, exactly 6 years. Nobody is talking about this, okay? Is this an accident? Is this a fluke? Is this a freak? Some may say yes, but ultimately we've got 25 years of historical data telling us that the market operates in 6-year cycles. So this is a very key part of the information that I am going to give, all right? If we look at what happened in 2008, all right, everybody knows the financial meltdown that occurred in 2008. If anybody wants to know what a crash looks like, it is this. It is an absolute self-implosion of the market, and the market actually finished lower than what it started pre-mania, is what I like to call it. So this is a prime example of what a market crash looks like. The finishing point is lower than the starting point. If anybody is waiting for this to occur right now, it is categorically not going to happen. But 2008 was clearly a global financial meltdown. There was a housing bubble across the world. Nothing was immune from it. Obviously, this started off when Lehman Brothers went bankrupt. Loads of other banks went bankrupt. And this was essentially fueled on leverage. What does that mean? Essentially, people weren't buying property with their own money. They were using leverage. So what they were essentially doing is, in some parts of America, you bought a house for $1 million, let's say, the bank would give you 1.2 million. So not only would they give you the value of the house, they would give you an extra 200,000 to spend on renovations, fees, etc. So nobody was buying property with their own money. So what then happens is, as soon as the market turns, the individual investor was not exposed, the banks were exposed, so therefore the banking system as a whole basically self-imploded globally. All right. So what happened between 2008 and the next peak, which was 2014? Okay. During this time, it was a little bit of geopolitical issues in the region, as there always is. During this time, we went through Arab Spring, okay, which affected large portions of the Middle East. There were lots of people displaced during that time. Now, the market remained relatively stable leading into the end of 2012 and into the start of 2013, where it started to change here. Now, why did the market start to move at this point in time? Again, The influx of population was quite high due to the displacement caused by the Arab Spring. Second to that, interest rates were basically at 0%. All right, so you could borrow money from the bank for free. All right, so there was investors that were chasing yield. For instance, if you could take a mortgage at 0%, you rented it out for a 5% yield, that is pure profit. All right, so on top of the fact that it was a no tax environment, at this stage there was still not even no corporation tax. So here it was investors chasing not capital appreciation. During this time, investors were simply looking to leverage the fact that interest rates were at an all-time low. So they were basically looking for the highest yield that they could possibly get, coupled with the fact that the net costs, i.e. no income tax, no tax on the property itself. This was a very good environment for investors to purchase property. And it was seen in the region still as a safe place to put your money. Now, what also happened was, during this time, oil prices were increasing. At the height, oil prices reached $110 a barrel. Okay, now obviously this region is very sensitive to the price of oil. The price of oil doesn't affect the fundamentals of a market, but it does fuel sentiment. All right, if a lot of the big industries, if a lot of the governments themselves are making a lot of money from the price of oil being high, that then encourages a lot of infrastructure investment, that encourages a lot of investment in the countries and in the region as a whole. Also, what happened during this time was you could get loan to values of about 90%. Okay, so it was quite low capital investment amounts. So during this time, it was only a 2% DLD fee, and you only had to put 10% in to buy a property. So in theory, you were buying a property with only 12% down. So if you are borrowing 90% at 0% interest, this was basically free money. For as soon as you rented that property out, you were making a lot of money. It was a very investor-friendly environment here. Now, obviously the market starts increasing, market starts getting momentum, headlines start coming, a lot of investors, a lot of eyes are coming on the buy because the house prices are rising quite fast, not too dissimilar for the environment that we've recently been in. And then what happened, which was a big one, was Expo. Okay, now this wasn't the Expo event itself, this was the launch of the Expo. Now, as we know, the government here, when they announce things, they announce things with catastrophic fanfare. When they launched Expo, there was the world's largest firework displays. Expo itself was on every single sports screen known to man. It sponsored the Premier League, the NBA, the NFL. Every single sporting event known to man was sponsored by Expo. But when they did this, it wasn't Expo. They weren't attracting people to the event itself. It said Expo 2020 Dubai. So all this marketing campaign that was done for Expo, a lot of people didn't know what Expo was. If you asked 100 people on the street, only a handful of them could have even told you what Expo was. But everyone was saying Dubai, 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 everywhere. The government did an incredible job at marketing the Expo campaign. So there was a lot of eyes being steered towards Dubai. Now, during this time, the sellers are getting wind of all of this eyes on Dubai, and they're getting a lot of more inquiries. There's a lot of buyer appetite. And what happened during that time was, from when Expo was announced to the peak itself, there was a bit of mania, if I'm going to be honest. That was the only time that we have that is comparable to what we're experiencing now. The developers could not launch properties fast enough. There was queues, there was people paying people thousands of dirhams to queue up for them. The developers couldn't launch properties fast enough, and they couldn't sell them fast enough. Very similar to the environment that we've recently been in. So what was the catalyst that stopped the market from going up? Now, this section of the market is a very, very important section, because I believe what we experienced then, we are experiencing now. So this is what is deemed as a crash. Everybody can see that. This is what is deemed as a correction. Okay, so when you ask what is the worst point in the market for brokers, all right, and it is the point in which the transactions are at the lowest, which is this point here, and potentially the point we are in right now. So when the transactions are at their lowest, buyer sentiment is at an all-time low because the market is starting to correct. All right, why did this happen? A few reasons. One, the government realized that the market was getting a little bit too hot. They capped loan to values. It was no longer at the internal bank's policy. The central bank themselves put in 65 and 75% LTV caps. All right. They also doubled the transfer fee from 2% to 4%. And this basically slowed down demand a little bit. They didn't want the market to get too hot. So on top of this, the price of oil went from $110 a barrel to $50 a barrel, which naturally impacts the government's cash flow and how much infrastructure and investment that they can make. And on top of that, the dollar strengthens. So when the dollar strengthens, it means it actually costs people more money to purchase property here. So those factors combined caused for the demand to be restricted slightly. But for that 2-year period, 2.5-year period, it was mania. All right. It was very similar to what we've seen over the last 2-year period, where you cannot launch properties fast enough. You cannot sell them fast enough. All right. So what happens during this time here? This is what is known as a correction. So sellers are like, I want to sell my house. They list their property here. No buyers inquire. The market doesn't agree with the market price. The one thing that people need to realize about market price is it is a living, breathing thing. How do you define market price? It's not up to us as agents, it's not up to an individual seller, and it's not up to an individual buyer. It is a combination of the two. It is what someone is willing to sell for and what someone is willing to buy for. If I was willing to sell for double the market price, I'm never going to get a buyer. So that is not the market price. Market price is what both people deem to be a fair price for that transaction. So what happens in time like this when the market corrects itself is basically sellers will test the market at a certain price. Buyers say no, no one inquires. Therefore, naturally what happens, we slowly move down the price points until a price in which the buyers go, I'm interested at that price. Market price has been found. Now this period here, okay, basically between 2015 and the start of 2018 is what I believe to be the best time in the market. All right, not the best time in the market for investors or for sellers, but for the whole market as a whole. This is the only time that we've had, apart from here when it was still a little bit in a global recession. This time here was great, right? For a few reasons. This is when I was in the market as a broker. I came in the market at the end of 2014. So I've seen 2 cycles enter into our 3rd cycle now. And this, the price point barely moved for about 2.5, 3 years. Okay. So from the high of 2014, prices came down about 15%. And then we entered into a period of price stagnation. That's not transactional stagnation. This was a time when all of the buyers knew the price and all of the sellers knew the price. There was always those specific sellers who wanted to chance the market, and there was always those buyers who wanted to chance the market. But this was a very stable time in Dubai real estate, okay? Because the prices weren't fluctuating drastically. Prices remained stable, transactions were great, and this is what period I believe that we are about to enter into. I believe that we will see a small correction, potentially of 10 or 15%. We will then enter into a period of price stagnation, okay, which is what the market needs to find right now. So what happened beyond that point to the point that we are now? So from 2017 kind of to 2020, what happened here is all of the projects that were launched during the 2012 to 2014 mania, given that there is probably a 3 to 5 year build period, entered the market from here to here. Okay, so transactions did not go down during this time. Quite the opposite, actually. Transactions were rising, the population was rising, but the population wasn't rising fast enough with the right demographic of people in order to soak up that supply. So from here to here, we ended up in a period of about 2 years where the market really did start coming down, 10%, 12% a year. And that was specifically because, not because nobody wanted to buy, they did, but we had too many properties coming to the market for the amount of people that wanted to buy them. That is why we entered into a period of progressive decline for a couple of years, leading up to the peak, which was 2020. So all of the projects that were launched here, handed over here, okay, due to the time lag of the construction. So this was simply an oversupply problem that we had. Now, looking back at this, you can see that the reason that the market moved so hard during COVID and the catalyst for the bull run that we've seen over the last 6 years pretty much is simply down to how well the government handled COVID. We were the first country open. Okay, there's people on holiday in here from June, July. They offered open visas to allow people to remote work, etc. And then this was really a catalyst for people around the world to look at Dubai and go, this isn't just a place in the desert anymore. They've got a lot to offer. And not just from a tourist perspective. This is a viable place to set up a business. This is a viable place place to live. This is a great place to start a family. There was loads of eyes that came on Dubai. Even the residents that were here during this time, and the sentiment is definitely being resonated now, they realized just how well the UAE government handled it. They were looking at the UK government in Europe still in lockdown 18 months later, 2 years later, and we just didn't have to deal with any of that. We had a small blip for a few months when no one really knew what was going on and it was very intense. And then after that, we realized just how well the government handled it. And the people that were here, they didn't leave. Naturally, you would have expected in that time for the population to decrease. Our population increased by 50%, and our house prices actually started increasing from Q3 onwards in 2020. So at this point in time, you then enter into a situation where the price point was below the construction value of the properties. Dubai was catastrophically undervalued. But the bull run wasn't necessarily fueled by just the fact that it was underpriced. We needed eyes, we needed sentiment, we needed people to realize just what Dubai had to offer. And it's a bit of a snowball effect. The more people that move here, the higher the population comes, more people within their space, within their ecosystem, on social media, etc., see what it's like living here. They speak to them, they get to speak to people firsthand. So what happens is when people realize this is actually a great place to live and they like it here, their network starts seeing what it's like there. They have someone to speak to. And the compounding effect of that is catastrophic. So the population growth from here, and the population growth, it's hard to say what type of people are moving here, but specifically over the last 6 years, the type of people is the best talent across the world. We've got businesses relocating headquarters just because they know how good of an environment it is to be here. So this, even though the population growth during this time was similar to what it was in some of these previous years, it was the demographic and the type of people that were moving here that really fueled this next bull run. Now, everyone, if some people are sitting here thinking that this is going to continue, we're going to have a 1 or 2 month blip and then the market will continue to rise, honestly, that is just completely untrue. Looking at everything that we have seen, I genuinely believe that we are going to enter into a small price correction. Is the market going to crash? Absolutely not. However, will we see a little bit of price correction? Yes. So I do believe that we will be entering into a period that is similar to that of 2015 to 2018, where we will see a small correction and then we will find a more balanced price point that buyers and sellers are happy to transact at, and we will remain there for a period of time. So yes, that is my prediction and that is my outlook on why the market did what the market did. But I'm extremely bullish as to the market coming back. And if anyone would like any information on this, please give me a shout. I'd be more than happy to have a conversation with anyone.